What's going on, ladies and gentlemen? Welcome back to the channel for another market update. Hope everybody had a lovely day. And with that being said, let's get right into the TA. All right, so we're going to start off with Mr. VIX. We're going to talk about Mr. VIX, then we're going to talk about SPY, QQQ, DIA, IWM. We'll talk about what's going on the charts, all right, going into tomorrow. But more importantly, we're going to be discussing what the charts are setting up for CPI. All right, yes, we're a day early here, but I do think we are setting up to do one of two things. Something just hit my window. Maybe a bird flew into the window. I don't know. I don't know. But yeah, guys, we have two things setting up here. Well, we have one thing setting up here on the chart, and there are two possibilities for CPI. So we're gonna talk about that first. All right. One of the possibilities on Mr. SPY over here is that we rally into CPI / trade flat tomorrow. So these are all, that's the same exact thing. Either way, you're going to have to stay up here with your oscillators if this is going to be the case. I mean, obviously something can happen. You could go up and you could gap up and still fade it out even with your oscillators up here. But either way, there's two things that could possibly play out, which is we go up into it. We start the downfall with the gap down on CPI, which, hey guys, that's probably going to be breaking this bad boy right here, that trend line, that upsloping trend line there, and then boom, that would be a clean break. And look at, guys, where we would be rejecting off of. If we trade flat tomorrow and then fall off CPI, there you go. And keep in mind, guys, they did just revise that down. All right, you can go watch me Kevin's video if you want. He talks about that. It's the only reason I knew about it. Me Kevin, he posts a lot of stuff that I don't watch, but hey, I will say he's the one channel that will let you know about the news on the spot, and he also does the live stream. So if you don't know where to go get information, go get it from me, Kevin, or go find out where to get it from me, Kevin. All right, but either way, they revised CPI expectations month over month to a negative number. All right, it's supposed to be a negative read, which in my opinion, that's dangerous. All right, that is now, like, before I was like, okay, you know what, like, we're probably going to see the trend prevail here. We're probably going to be seeing CPI cause a gap up. All right, but all right, with them revising it to a negative number, I don't know, that's kind of setting you up for failure. I've seen in the past where they pretty much set CPI up just dangerously, and it's just hard to beat those things. All right, so it's kind of like, I'm not going to say it's guaranteed, because obviously we have been seeing a trend of inflation coming down, but I do think they're probably overshooting that thing. But then again, guys, charts do predict the news. So I don't really care what is in that CPI report. We're going to be reporting on the charts here because, yeah, the charts predict the news. So we don't need to have a crystal ball telling us what the news is going to come out if we have the charts suggesting what that news is going to be. All right, and as of right now, if we were to stay up here right where we are right now, first of all, that would be picture perfect. All right, come up to this 390 392 level, rejection with the big fat inverted hammer that formed yesterday's wick. All right, and then yeah, we would consolidate up here. You came down, you flipped this. So this is actually something I called out on my Twitter this morning. So again, another reason, follow the Twitter, right? On the spot TA, this is just where I'm going to be posting thing on the spot. I'm not going to post on the YouTube. You're going to see the one video each day on here on YouTube. All right, Monday through Thursday. Well, Monday through Friday, and then we have the weekly update that comes out either on Saturday or Sunday. And yes, we've been pretty spot on. I'm not going to toot my own horn, but we've been pretty nice with it. All right, and I'm not going to say I have the most experience in the world. All right, I'm 23 years old. I'm not one of these 40 to 60 years old, but I'll tell you guys right now, my life has been the market for the past 2.5 years. I've been obsessed with it. All right, so this is all I think about. Well, not all I think about, but you know, this is a vast majority of what I think about throughout the day. And yeah, I mean, I'm obsessed. That's all I can really say about it. But yeah, guys, it would be picture perfect if we had one rejection here and then we had another rejection / we just trade flat up here up until CPI, and then boom, you get that powerful gap down that breaks this upsloping trend line we have right here, which we could extend out here. All right, it would come down, it would break that cleanly, or it could break it cleanly, I don't know. All right, that would be a big move right there, just the gap down. But either way, right, we either gap down on CPI or we gap up. All right, and if you do gap up, just realize it's going to be bring you up into oh, I moved that. It's going to be bringing you up into the 4 resistance levels that I talked about. You have the golden pocket resistance, you have trendline resistance, you have your gap fill resistance, then you have the 200 MA. All right, all of these are, like I said, that the probability suggests we are going to be rising into that, just because these are probably going to act as a magnet. We saw it happen back here. We saw it happen back here. All right, is it going to happen a third time? People think like, oh, charts don't work out that perfectly each time. Well, I'm going to be honest, guys. Actually, like most of the time, when you see something on the chart and people are like, oh, that's too obvious, It's actually usually like that's why it works. All right. You had this perfect tap of the 200 MA and the trend line up there. Boom. You had this perfect tap of the trend line up there and the top of your rising wedge here. Boom. All right. And you were in the golden pocket. Boom. And you had a gap fill right here. Oh, but it's too obvious. Well, guess what, guys? It worked. And you got to fade that move out pretty quick. Oh, guess what? We came right back into all of those same exact resistance levels and then faded it out. Literally gapped up. And then, like, this is supposed to be a red candle right there. It's not. But it should be a red candle because we opened here and we closed down here. Yeah, guys, I'm just saying. I still give it a solid shot that happens. I'm saving dry powder for just if that happens. And if that does happen, I'm going to be entering January 20, most likely the 380 puts. All right, they're going to be dirt cheap down there. All right, maybe we'll get the 385s, maybe even 390s. I played 390s. I called it the Pal Lotto, and I got it at highs yesterday. I was talking to my friend about it. I literally got it like right up here, and I was like, Dave, a FOMO, I'm doing it. I'm doing it. So I ended up doing it, and yeah, they ran 200% by the end of the day, so that was pretty cool. I didn't get that full gain. I took profits on those because, again, lottos. But yeah, guys, don't gamble with your money. That was strictly, I just wanted to see what would happen if Powell would tank the market. He didn't do it, but luckily I wasn't even in it for it. But yeah, with how the charts were setting up this morning, I was calling this out like, hey, all right, I don't know if it's going to end up playing out, but you were down here when I think I posted it. You were down there, and then you come over to DIA, and you were tapping this right here. You had the false breakout, and then right there, look at your daily time frame. All right. Oh, it's actually not on the daily time frame. It's only on the 4 hour and the 1 hour. So yeah, look at the 4 hour. You wicked up above that and then rejected there, right? And look at that. You literally had a picture perfect break and retest there. Sloppy lines. And it's the same exact thing over here on SPY. All right. You literally broke up and came back and retested. All right. I know there was a lot of things on Twitter, whereas, oh, this is a bear flag and stuff. It actually still can be a bear flag. All right. Look at this pattern right here. We can actually, you know what? I don't know why I even used that. We can literally just go a little like that. All right. It still is. Actually, let's see if we could draw a parallel channel. I think I do control and drag it. Yeah. So control and drag. It still is. It's pretty parallel to that other one right there. Right. I'm just saying this still isn't a terrible setup right here. If this is going to turn out to be one giant bear flag on SPY. All right. It could. All right. If we end up coming up here by tomorrow, and then we end up dropping down, yeah, I'm going to say, like if we end up staying up here, I'm going to say the probability lies in the fact that, well, not the fact, but in the scenario that we end up gapping down off CPI, all right? They are revising it down, like I said. That is not good, all right? They should, if you want to gap up, you want it to be high as possible so it comes in and it can beat that number. Well, negative number, we haven't had that this whole time, so we're going to have to see. We've already had 2 of the lowest prints we've had month over month and year over year. All right. Went all the way from, I think it was high 7s all the way down to low 6s. I think it was 6.1% last time. So I'm just saying they're pushing it here, but you know, I like, nobody has a crystal ball, so we don't know. That's why we're here talking about it, right? But with that being said, now that we got the CPI discussion out of the way, those are the 2 possibilities. And by the way, guys, I just did on QQQ, I want to point something out too. You're right here. Now, when I added these, you were actually rejected off of it. If you come over to, I think it was the 4 hour time frame I was seeing it. Yeah, you had, it looked like you were getting rejected again. But I did call out the possibility that, and I said this was actually the likely scenario that we rise into CPI and form this bearish divergence here on your oscillators. All right. And I still think that is the probable scenario here. All right. Especially now with that revision down. Now it's kind of telling us like, hey, they're trying to set this bad boy up. And look at it this way. All right. The people who are in control of the CPI, they should freaking know. All right. If like it, I don't think it's just like, oh, you have to wait until that date until to you know, see what CPI is. They should know what it would be. They can do their rough estimate. All right. So, and that's how I see it. Maybe that's not how it works. Maybe it really is a super mega surprise to everybody. But I'm pretty sure the people who are releasing it and the people who are doing these revisions up and down each time, I think these are the same people who can literally see the progress of CPI before that gets released. So I'm just saying, guys, the charts predict the news, and the people who control the big bucks, they make it always predict the news. All right. TA is really how the market moves, and you always need excuses for why something happened. All right. And that's why these catalysts happen. All right. The moves are already going to happen unless you have some crazy number come in and then a crazy algo buy and gaps up $10. That would be pretty freaking sexy. Like, even though that would have a lot of temporary pain there, I think we'd see the if we came up to 395, we're gonna see those down at like 350. Whatever it's called. If we come up here, we're gonna see them at 350. Up here, we'll probably, this range right here, we'll probably see them closer to 300 bucks. At that point, I wouldn't even be adding the February 3rds because that position will be perfectly fine. I would be adding the January 20s, like I was just saying at the beginning of the video. I'm making sure to have some dry powder for that, because it's still on the table. All right, it can happen. All right, but yeah, guys, I want to point out that you are up right now on QQ and SPY, and your CCI is actually hinged down here on SPY. All right, which tells me, all right, and keep in mind, look at this very lackluster volume you got going on there. That was an absolute awful arrow through there. I think that's a little better right there. But look at that terrible volume, guys. We're at 2:30 p.m. Eastern Standard Time. There's no way the volume, you know, the end of the day volume spike that we probably see demonstrated somewhere. Right here. End of the day, end of the day, end of the day. There's no way that ends up bringing, especially like, you're definitely not coming up here, but I give a low probability that you're even going to make volume up here, which means you rose off of declining volume. All right, which means this price action is not being supported. All right, now another thing I use to show me if the price action is being supported is the CCI. All right, the CCI is literally the average of all of this specific amount of buying and selling pressure over all points in history of this ticker. All right, on this ticker specifically, what would that have done? And over all points of history, this would have been your average. You would have moved down today. All right, but yet we're up today, which means someone's holding this bad boy up. Someone is making this have fake price action. All right, which that's why I think we probably are going to rally into CPI, and then we're probably gonna, you know, we're gonna die off CPI. I don't know if that is going to be the case because, again, no crystal ball, but if I was to take a guess at it, that's probably what we would get going. All right, do we have stochastic crossing down? We do have stochastic, like, literally just crossing down right now. Your RSI is hinged up, but it does not work the same as the CCI. All right, something I actually will I will say right now. So I changed the Weeble setting yesterday to 20, and it literally still acts completely different than the CCI here. Like, not completely different, it just doesn't show the divergence. It doesn't make the same things. It doesn't move the exact same. I don't know why it still would be different, but either way, I decided today I'm actually going to keep it on the 14 setting, the default setting on Weeble, because first of all, a lot of, like, I always keep all my indicators on default just because how I look at indicators, guys, they only work because they're self-fulfilling prophecies. All right, like, I guess the CCI is self-fulfilling prophecies. I don't know if I said that wrong. I don't know. I'm weird. I don't know if CCI does work like that because I don't know if a lot of people use the CCI, and it kind of doesn't, like, it's not like the MACD. I don't know really what affects the MACD, but I imagine the MACD and the RSI only work so well because so many, like, that's the newbie, and I'm not saying the RSI is just for all noobs. I'm just saying, like, those are the two beginner indicators. So a lot of people are going to be watching those crosses. A lot of those people are going to be watching when it's overextended. And there's that. CCI, probably not so many people are watching it. But hey, guys, the CCI is, I love this indicator. All right. And I also saw a guy on Weeble yesterday posting, saying, like, hey, you don't need indicators to nail the market. So I'm going to be honest, guys. Anybody flying blind, you're doing exactly that. You're flying blind. All right. I don't know why somebody wouldn't take advantage of the indicators. This is literally, they add so much to my TA. And I'm going to be honest, I've been nailing it. So I don't know. I just don't know why somebody would say something like that. I really don't know why you wouldn't use indicators. Okay, it's not just big money controls everything. There's clearly signals that come off of indicators that you could be using. So if anybody is saying that, just realize they're flying blind, and they're probably not winning even close to as much as we are here on this channel. All right, so, and there's just no point in not using indicators. You're flying blind. All right. All right. So, but you get the daily time frame. You got a rejection here. You got a rejection here. I don't know what's going to happen here. But I entered more puts, more February puts, because I mean, like, guys, there is a possibility they just trade you flat tomorrow and you just stay here. That would kind of be picture perfect to me. But also you could come up and form that. Now, picture perfect going into CPI for downfall is you would come up and you would form that bearish divergence. So you would come back up, touch the top of this bear flag looking structure here in SPY. And then, yeah, you would literally just do exactly that. I don't know why that's actually tilted. Let's like that. Redraw that. Oh, it's changing. Yeah. like change it. I don't know why it's changing. Look, it's like literally completely different from where I dragged it down to there. I don't know why it's not keeping it parallel. Either way, you got this bear flag looking structure, all right? And best case scenario, you come up and you make a higher high, you make a lower high on your CCI here, your 4-hour CCI. But that is where momentum is right now, all right? The 1-hour time frame still has a little room to go. But again, that's why I took those puts, just to be safe rather than safe than sorry. And I was just telling my friend, like, hey, the more puts you have up here, the less risky you have to play things. Like, straight up, you get to play things so much less risky, because guess what? You can take so many freaking profits along the way the more contracts you have. That's how I see it. All right, you don't just, you don't have to hold for that desired game. You could just say lock in gains, safe. Lock in more games, safe. You could have like 10 different stops of locking in gains. All right, of like, that'd be pretty cool. You could just play it super safe. Not gonna say I'm gonna be doing that because it's so much, and I'll just take profits at support levels on the way down. These branches that we're most likely going to be jumping on, which is going to be like here, like here, like here, like here. All these branches, guys, we're going to jump on them. Eventually, we will put them on our chart when they are relevant. Right now, they're not relevant. But yeah, getting back to the daily time frame, all right? We're going to go over VIX, all right? And this is something that I actually called out a while ago on the RSI. Now, I don't know if it's exactly going to play out like that, but it would be very cool if this happened, because this is the exact reason I left this up here. I want to point out, you're literally here at your trend line here on Mr. VIX, all right? So it would be picture perfect tomorrow if we go up, form that 4-hour bearish divergence on SPY, and then we also bounce here off of VIX's trend line, all right? Or maybe we go a little lower and then we wick up, all right? Would be picture perfect if we're green tomorrow on VIX and then also green on SPY. That would signal a down day within the next 2 trading sessions, all right? Or at least an 80% probability of one. So that would be very freaking cool, all right? That would be picture perfect, and it would just be so obvious that you're gonna die off CPI, all right? Or like, even if not, who cares, all right? You're dying. All right, you're dying real hard if VIX holds this freaking trend line. All right, but you also reset your CCI, so it's exactly here where you end up having this massive day here. We went from $20 all the way up to 24 bucks. All right, that is a massive gain right there. What would that be? That would be a 20% gain on VIX in one freaking day. All right, this is the kind of action that I'm expecting. I told you guys we're going to need this counter trend move in order to have an impulsive move down like everyone is expecting, all right? And keep in mind, guys, a lot of people were loading the boat down here, just getting squeezed. I told you guys it was hurting me so much to just practice patience down there and not load the boat. I only loaded 20 Feb puts. But like, all in all, it ended up paying out. This is why I needed to do what I was doing, all right? I was not going to play it super safe down there, because you would have been down so freaking much. I remember these things probably at lows, they're probably going for like 800 bucks, 850, I don't know, all right? But I bought the first round of them at 725, the Feb 3rd 380s, and like, those are they're not even close to that right now. They're close to 400 freaking dollars. All right? So like, what I'm getting at, patience is going to pay us, especially throughout this bear market, okay? You don't have to be as patient in the bull market. As you see, you probably could have bought it any of these times, held for a week, and you would have been in the green. But like, in this bear market, no, you're going to get wrecked if you do not practice that patience, all right? But yeah, guys, all in all, VIX is it's setting up to rally, all right? And we already, I'm going to bring you guys back to what we got going on in the weekly time frame, because that's something I don't want anybody to forget, all right? We have 2 of those signals now. Now, we actually did take a dive here on VIX, but we did yesterday have that bullish harami, all right? But we already had it. So maybe that did mark, that was our signal right there that, hey, VIX is about to explode. I did think it would be happening last week, all right? I did think, because we had that signal, and last time we had that signal, it was right there. So we had 1, we had 2, we had 3, we have this one right there, and you gapped up there. All right, you have 5, you have 6, you have 7, you have 8, you have another. That's not one. That's slightly missing it. All right, my point is, guys, you have a lot of them. There's 7 to 8 bottoms here that were called on VIX, and even if we got to wait a little, guys, this is the point of having some date on the contract. I'm not going to say I have the most date on my contracts, but I am very confident they're going to get in the money relatively quick, and they're going to be trading like shares. All right. Now someone asked me if I could go over how I just look at, like, hey, profit on my contracts, right? Now, Yeah, okay. If you're buying them at, we're just gonna literally come over here. We're gonna pull up the calculator. All right. And this is all I do. This is literally it, guys. All right. So I'm in the 380s, right? If we get down to 350, they're gonna be worth 3 grand a pop. Now, I'm definitely not gonna be holding till down there, but that's the point of having date on them, because I want them to get in the money and just trade like shares. So say it gets the expiration and they're worth 2,000 bucks. There you go. Give my 2,000 bucks. I can sell them. I can take those and they'll be worth 2,000. It's not like they're going to go to zero because of the expiration. No, you're deep in the money. You're $20 in the money if we get to 360. All right. I think it's going to be very violent. I think we're going to come down here super freaking quick. All right. I don't know how quick. Maybe it's like this. In 4 weeks, you're down. Let's just see. All right. You're down 41 bucks, right? If we're going to fall 40 bucks from 390. All right. That would actually, yeah, that would bring us almost right to about lows. And yeah, we would get the desired gain. But again, the more contracts you have, the less risk you have to be. And that's like kind of it's my plan here. All right. Risk tolerance, I have it. All right. My risk tolerance was specifically built into my trading plan here of what I'm doing with these. All right. I didn't stick to the exact plan, but either way, guys, I'm securing my bag. All right. Over the next few weeks, I am hyped to have a very large nest egg, and I won't need. I don't know. Maybe I won't feel the need to go super heavy on the next move. Maybe I'll just not do it. I mean, but we are in a bear market, and this is literally the most ideal short setup was coming into this range. We had the same thing happen over here. All right. When you see these things, you pounce. All right. Or at least like me. All right. I'm a firm believer. If you are going to get rich, it's going to be over 1 to 2 years. You should become I'm not going to say you become a master at your craft in 2 years, but I'm going to say you should get fairly far along if you're really taking that seriously. And like I said in the beginning of the video, guys, I'm obsessed with this bad boy. All right. I love the market. It's literally, I can't help it. I think about it. I talk about it. I hate how much I talk about the market. All right. Just with my friends and family. I hate it. All right. But at the end of the day, I love it so much. All right. I just don't want to talk people's ears off about it. But I know I could talk your guys' ear off about it, because you guys are only here about the market too. So you got to be obsessed with the market too. Maybe not as much as me, but hey, you guys are still like, you're probably obsessing over the market. All right. So I hope you guys don't find this all boring. I really do. I mean, I'm not going to say I try and make it not boring. I just kind of I come on here and talk and read the market. All right. Read the charts. All right. So we went over the daily charts. All right. QQ, it's looking the same exact way as SPY. You have your stochastic in overbought territory now, just tipping its head in there. And then you have your CCI doing the same thing. And that's how we know, hey, that combined with this declining volume here, this is a fake move, guys. We're moving up right here. You're up 0.6%. You're up 0.5% on SPY. Fake move. All right. So, like, I'm not saying they're going to pull the rug tomorrow. They could have another fake move tomorrow, which I think is likely. I think they either trade you flat going into CPI or from up here, or they end up, what's it called? Brain fart. Or they end up bringing you up a little further. But, like, picture perfect scenario, yeah, we just trade flat or go up, and we don't end up having that drop tomorrow, and then we don't have to worry about a gap up on CPI. But even if there is a gap up in CPI, don't leave yourself high and dry. Make sure you have at least some dry powder to take advantage of the, like what I do is you buy the shorter dated contracts. All right, the further you come into the zone, you hit freaking you hit right here 396. You hit 200 MA. You hit, like, let's say you really do gap up in CPI and come up to 400 bucks on the spot. You load the freaking boat on those Jan 20 puts or like whatever you freaking want. All right, but they're gonna pay way more than what you would be buying down here. All right, so in terms of how I calculate my options, all right, I do them because they're gonna be trading like shares. Like what I did up here was Jan 20. I think it was 395s I played. All right, and they got in the money. And when we were down here, I finally got rid of them down here. Like I got rid of most of them here. I think I had 60 at first. And I ended up having like 20 down here. And I don't remember what day I offloaded them, but I did end up offloading them, and now they're dead because they got out of the money, or they're right in the money, so they're around 400 bucks again. That's where I was entering them up here, guys. All right, so sexy freaking gain there. All right, but that's the point of getting in the money. So they got all the way, not to expiration, but we only got like another week on those, week and like a week and a half there. All right, and guess what? They're not completely dead because they were in the money. Well, now they're getting there, but down here they weren't because they were in the money. All right, when they're $10 in the money, they're going to be worth $1,000 at expiration. That's how I look at them. All right, so $3,000. This is exactly how you're going to do it. Whatever entry you get. And by the way, if you want to literally look at we'll pull up Webull. If you want to literally look at how to see all right, how to see what they are going to be. Well, I'm playing the 380s, right? All right, so this is how I calculated what they're going to be worth when we go up there. You obviously got to take into account theta decay. We have 24 days on them. When I entered these, they didn't have 24 days on them. All right, but either way, all right, when I took the first entry down there, in that consolidation, all right, and that was just safety. I wasn't going to miss the boat. I was going to make sure I at least get my desired like account size by that time. And then, guys, I'm not going to say I'm going to be satisfied with that at all. I'm probably not going to ever be satisfied, which kind of sucks about this, because that's how you really know it's not about the money, because you'll just keep chasing it. Because then there's no real number you get to, all right, that's going to make everything okay. So I guess that's why I say it's an obsession. All right, I'm going to do this for the rest of my life. I love it. All right, I love it. I don't care about the money. Eventually it's going to be so big that people are going to ask, like, dude, why are you still doing this? I'm going to be like, it's not about the money. I just love it. All right. But yeah, all right. So how I look at these is like, we're going to get 380s by the time they're at 315 or at 395, they're going to be $15 out the money. So you take 389, you subtract 15, that's 374. All right. Am I doing that math right? 374. They're going to be worth 280 if we get up to 395 on SPY. All right. So that they're right around here, right around 290 right here. All right. Maybe they get a like gap fill. They'll be at 260. So that's what I'm saying. Now you're looking at a very significant gain. All right. So divided by 260. All right. Now you're looking at an 11x if you're buying the February 3rd 380s at the gap fill on SPY. So that's literally like, it's as easy as that. You literally just go like that. All right. You literally just can, like, let's say you're buying at 450. All right. You would do 3,000 divided by 450. Now, I promise I won't be holding like nearly all of them to lows. Probably I'll offload the vast majority of them by the time we hit 370, 365. So they're going to be $15 into the money. So 1,500 divided by anything I'm buying up here. Like I just bought some for 450. All right. That's going to be 3.3x right there. All right. So not bad at all. All right. But I do think you're going to have that very swift move down. And then you would be getting something like this. All right. Then it would be something like that. All right. And that's what I was saying. The more contracts you have, the less risk you got to take, because you can offload that. And then, like, say I still want to chill with 20 or 30 contracts for hitting lows to get that desired gain. Like, hey, buying them at 300 and going down there, that's the 10x on whatever contracts I was buying up there, right? So that really is as simple as it is. There's nothing else to it. It's literally that. Look, 6666. Wow, look at that. There's nothing else to it. That is as simple as it gets. All right. There's nothing complicated about it. I really do try and make things as simple as possible on this channel, because, guys, I was getting wrecked most of this bear market. All right. And I'm not even gonna say most of this bear market. Like, I was having big swings in my accounts. But again, I would wreck myself. But then you had this where I just continuously blew up my accounts over and over and over and over again. All right. Which just wasn't okay. All right. So I'm trying to make it so, like, you know, beginners and just anyone can just actually make money off of options and not just lose their ass. And guys, just realize it, like, don't make it a fast gain. I just showed you guys that, like, 3x. All right. Even if you're taking them at what'd that be, 365. All right. So instead of 350, you're taking them off the table. You're taking them at 365. There's your guaranteed 3x. All right. There's a 200% gain there. Right. If you're playing with 10 grand, there you go, dude. You just made $20,000 in 1 month. Who would complain about that? That's more than the vast majority of people are making. All right. Like, it doesn't have to be the slow gain, and then boom, the next time it comes around, maybe now you throw 20,000 out of your 30,000 on this next ideal setup, and boom, in another 1 to 2 months, now you freaking made we'll say now in 2 months, now you turned $20,000 into $60,000. Boom, you have another two $20,000 months. By the end of the year, dude, you're at like 200 something thousand dollars. All right, so like, it doesn't have to be this very quick gain, because like, honestly, that's kind of how you're going to burn yourself, by not playing time. All right. By not sticking to the plan, by trying to sit there and like day trade. Oh, but I know it's going up, so let me put half my account on it. Well, guys, you're going to do that. And then boom, what if it goes against you? And then boom, you're back where you started. And then boom, you're a sad boy. All right. There's no reason to do that to yourself. Just wait patiently. Just look at it like this. All right. In 6 months, I could have like 10x what I got right now. All right. There's no reason to rush things. All right. And there's also no reason to do what I'm doing. All right. I'm a younger individual. I don't really care. All right. Like, I'm pretty confident in my ability. I'm pretty confident in what I'm doing here. All right, I'm not taking the risky setups. I'm literally only taking the swing setups. I literally made a video about it the other day, how to not get wrecked on options. Those are the type of setups I go big on. All right, you had a falling wedge, you had a rising wedge here, you had a rising wedge here. These are the type of setups you go big on. You had 5 different factors suggesting you were going to be going down along with your bearish divergence. You had a fat bearish divergence, then you come over to DIA, you had like a 5 points of bearish divergence. All right, like it's a very significant chance there that you are going down. Those are the ones you go big on. All right, guys, so I think that is pretty much it. We could look at the hourly time frame just to see what is happening there. Right, you are getting, and this is what I was saying about that 390 392 level. It would be picture perfect if we trade flat up here. All right, and that's just because, hey, it would show on the daily time frame that, holy crap, that's where the sellers were lurking. It was at this previous support. Look, you support. All right, I mean, obviously you had all of these little things in here. If you come over the 4-hour time frame, you'll probably, no, I mean, you had 1, you had 2, you had 3. We could call that a bounce. All right, but then you slice through it. All right, and now you're here. You have 1 rejection. You have 2 rejection. I don't know what's going to happen tomorrow. All right, and I don't know what happens going into power hour. It's 2:50 Eastern Standard Time right now. But yeah, all right, guys, you have declining volume here. All right, so this update is not being supported. It is fake. The rug is on its way to being pulled. Guys, with that being said, I hope everybody's really hyped about making an absolute crap ton of money coming up. All right, hope everyone's patiently waiting. I hope everyone is taking advantage of this counter trend rally that we've been calling for. All right, we have been waiting for this bad boy. All right, patiently. Unfortunately, we had to wait patiently for it. I wish it just came quick like this bad boy. But whatever, it is whatever, because it's here. So I hope everybody's taking advantage of it. I know for a fact your boy is taking probably too much advantage of it, but you know what? Again, the more you get, the less risk. All right, I will catch you guys in the next one. Peace.